Are we ready to explore the future challenges and opportunities in the 2025 housing market?
We've gathered insights from esteemed experts, Jason Walter, Ken McElroy, and Ryan Pineda, to bring you the latest trends and predictions during these changing times.
And the best part, you'll receive these vital takeaways quickly without wading through hours of analysis.
Absolutely. You'll want to hear Jason Walter's thoughts on how shifts in Fannie Mae's forecast could impact home sales.
Welcome to Financial Insights in Minutes, where we break down the top real estate market videos of the day.
But first, don't miss Ken McElroy's expert analysis on immigration policies affecting housing market supply.
The conversation today is all about the pressing issue of immigration policies globally and their impact on housing.
That's right. Countries like Canada and Australia are facing intense pressures on their housing markets.
What's the central argument here about immigration and housing?
Simply put, as more immigrants arrive, demand for housing increases, driving prices upward.
So we see a direct correlation?
Absolutely. Countries are now realizing their existing housing stock can't keep pace with such rapid population growth.
Canada recently made headlines by slashing immigration numbers.
Yes, they aim to stabilize population growth to better accommodate housing and healthcare needs.
So, how many homes are actually needed to fix the housing problem?
Canada requires over 3.5 million new homes, and that's just to bring some stability.
What's causing the delays in housing development?
Much of it is red tape. Planning and zoning regulations can be a nightmare.
What are the implications of these immigration cuts on rental prices?
While immigration may be reduced, failure to build more homes will keep pushing rents up.
To wrap up our discussion, what's the takeaway here?
We need smarter immigration policies to offer sustainable solutions for housing concerns.
Today, we're diving into breaking news from the housing market that could signal a major upheaval.
Yes, with the recent GDP numbers and alarming warnings from home builders, the signs are unmistakable.
What's the core takeaway from Lennar's stark warnings?
They're making it clear affordability has become a critical issue for consumers trying to secure homes.
Interesting. What does that say about the current state of the housing market?
It suggests a dire need for price adjustments. Without it, we're looking at a potential meltdown.
Let's start with the GDP numbers. Coming in under Wall Street's expectations, how is that impacting the market?
It's alarming, as economic growth seems to be stagnating, a clear indicator of things to come.
Can you break down what Lennar is saying about consumer affordability?
Absolutely. They claim that many consumers simply can't afford to buy homes anymore.
What predictions are on the horizon if these trends continue?
We could see significant price drops. Builders need to adjust or face dire consequences.
As things stand, what can we expect in the real estate market?
If current trends continue, bankruptcies may not be far off, leading to a chaotic market.
Could tightening credit be the catalyst for a housing crisis?
Exactly. Without easy access to financing, builders will have to reduce prices drastically.
Summarizing everything, what should viewers keep in mind?
Stay vigilant. The housing market is teetering on the brink. Affordability is the linchpin.
Absolutely. The next few months could redefine investing strategies significantly.
Definitely. It's all about staying informed in these turbulent times.
Today, we're dissecting the alarming trends in the housing market with insights from Fannie Mae.
Right? And given the current spike in inventory, it doesn't quite add up with sales projections.
Let's dive into the thesis. What's Fannie Mae predicting?
They claim we're looking at fewer home sales than we've seen since 1995, primarily due to rampant affordability issues.
That's a stark contrast to the present market we're witnessing. What's the reasoning behind this?
It comes down to high mortgage rates and the stubbornly increasing median home prices.
So, what's the current state of mortgage rates?
Rates have dipped, but are still problematic for buyers. They're at their highest since July.
What about home prices? Are they still rising?
Yes, but the increase is moderating. Fannie Mae noted a 3% rise this year versus several higher rates in prior years.
And what does current housing inventory look like?
We're seeing new listings picking up, but still way behind where we were in years before 2020.
What's the outlook for home sales next year?
Fannie Mae suggests a modest recovery, anticipating around 4.5 million sales by 2025.
How do economic factors play into this?
Stronger data can lead to fluctuating mortgage rates impacting prospective buyers and their purchasing power.
So next year could be a historical low for sales.
Exactly, it could drop below 4 million, which is a staggering 29-year low.
What's the forecast for home price increases?
They're expecting a slowdown with just a small increase predicted by late 2024.
To conclude, what should viewers keep in mind from this analysis?
The critical takeaway is to remain aware of trends and perhaps adjust expectations for home buying.
It seems 2025 is going to be a year to watch closely.
Absolutely. Understanding these trends will be crucial for any potential homeowners.
In today's housing market update, we're unraveling the puzzling trends Dave highlights. Let's get into it.
Absolutely. It's definitely a mixed bag out there with prices rising, but buyers facing daunting affordability.
What exactly is the current state of the housing market?
He emphasizes that while prices are high, averaging $429,000, there's a potential cooling off ahead, setting the stage for better buying conditions.
Interesting. What factors are contributing to these price increases?
Well, importantly, the 4% year-over-year growth outpaces inflation, demonstrating that 2024 is relatively stable compared to prior booms.
What's the quick takeaway on home prices?
Prices are not crashing, which is a positive sign, but growth is certainly decelerating from the past few years' rush.
What's driving this sluggish sales volume?
Demand is low due to rising prices pushing buyers to the sidelines, compounded by the general slowdown before elections.
So how do supply and demand play out here?
It's a classic tug of war. While buyer interest is present, affordability remains a deal breaker, keeping supply tight.
What does safety look like for potential buyers this winter?
Opportunities for negotiation could emerge, particularly for those watching market temperatures closely for the right moment.
And what signs might indicate improving conditions?
Increased days on market could signal sellers becoming more flexible. If buyers pounce at the right time, deals may be struck.
So how should investors prepare for upcoming mortgage rates?
Keeping an eye on trends will be crucial. Waiting too long could cost buyers their chance at a good deal.
Wrapping it up, what's the key takeaway for investors?
Patience is vital. While tough now, smart investors could find the best deals as conditions shift this winter.
Winter may just foster better opportunities, so it's smart to be ready. In today's update, Melody Wright brings us crucial insights into the current state of the real estate market amidst some major disruptions.
With Hurricane Helen causing chaos, Melody is on the ground collecting vital data to keep us informed.
What's the main takeaway from Melody's analysis today?
She emphasizes that we're witnessing an unusual confluence of high mortgage rates and market disruptions, leading to vulnerabilities in home sales.
That sounds pivotal. What specific market signals is she seeing?
Existing home sales are notably low, and pending home sales are being impacted by halted closings due to the hurricane.
Let's unpack the home sales data. What do the numbers reveal?
Despite some signs of recovery, existing home sales are at a historical low, which is alarming.
How is Hurricane Helen influencing real estate transactions?
Closures are delayed as homebuyers struggle to finalize contracts amid rebuilding efforts.
What does Melody say about the rising mortgage rates?
They're a critical factor. Over 7% poses a significant barrier for many potential buyers.
Let's discuss inventory. How does it stack up?
There's an increased inventory level, but the corresponding sales decrease indicates oversaturation.
What regional trends are emerging?
Out west, the Northeast is booming with inventory, whereas the South faces mounting sales difficulties.
What's Melody forecasting for the housing market?
She warns of a possible downturn, suggesting housing demand may further decrease due to economic pressures.
Regarding financial health, what predictions are being made?
Higher delinquency rates could become a reality as recovery from these storms complicates payments.
What key insights should the audience take away?
Melody advises caution, emphasizing the need for strategic planning amidst uncertainties.
Caution appears to be the order of the day as we head into a volatile economic environment.
Indeed, positioning for potential market shifts is vital for investors.
Today's discussion highlighted pressing challenges facing the housing market as shared by our experts.
Absolutely. Melody Wright raised important points about how disasters and rates stifle the market, while Dave pointed out that high prices may stabilize, opening up chances for buyers.
And let's not forget Jason Walter's insights on the looming drop in sales tied to Fannie Mae's forecast.
Right? It's a precarious balance, especially with Mitch Wexler warning of bankruptcies among builders, painting a stark picture for the future.
Ken McElroy also brought an interesting perspective on immigration-related housing demand, showing how interconnected these issues are.
Indeed, these insights are invaluable for anyone looking to navigate the 2025 housing market. If you found this discussion helpful, don't forget to like our video and subscribe to remain updated.
Thank you for tuning in. We encourage you to check out more of our content for further financial insights and market analyses.